Hi, I'm Josh Derman. I'm with Insurance Associates, and today I'm going to talk about the insurance your contractor needs to have before you allow them onto your property. Examples of when you should be talking to your attorney and insurance agent are before you sign the painting contracts, landscape contracts, solar installations, re-roofing, repiping, and renovations of common area. The point of the presentation is to provide enough information so you have a basic knowledge of insurance as it relates to construction issues. But really, I want to stress that if you have a big project, you need to seek professional help. I'm going to go over some common exclusions in the general liability policy and differences in policy wording. Other coverages I'll talk about include auto, work comp, umbrella, and professional liability. Finally, I'll briefly talk about licensing and bonding. So the general liability policy covers your liability for bodily injury and property damage to third parties. Basically, it's when you hurt someone or damage someone else's stuff. For contractors, it also covers their products or completed operations, or in other words, construction defects. A construction defect is generally defined as a defect in the design, the workmanship, and or the materials or systems used on a project that results in a failure of a component part of a building or structure and causes damage to a person or property, usually resulting in financial harm to the owner. So damage resulting from a contractor's poor workmanship is covered, but the poor workmanship itself is not covered under the insurance policy. That's a warranty item that should be addressed in your contract. Coming up on the next slides, there are going to be screenshots of policy language. You probably can't read the wording, and that was done on purpose, so don't try to focus on the wording. Insurance policy forms are generally standardized by the Insurance Services Offices, or ISO, based in New Jersey. They create standard policy forms. Most insurance companies take those forms and tweak them. They add coverage, take away coverage, whatever they feel they need to do to be competitive. This is a standard ISO language for the pollution exclusion, and it's 675 words used to say there's not much coverage for bodily injury or property damage arising out of a pollutant, with some exceptions for building heating equipment, fuels and lubricants in mobile equipment, and hostile fire. The next exclusion is the lead exclusion. Old buildings have lead paint. Your remediation contractors should have pollution coverage because they can sometimes need to remove and dispose of building materials containing lead. Hire a good construction manager to help you identify if you have this exposure. Next is the asbestos exclusion. Examples of where you'd see asbestos in buildings could be flooring, ceiling tiles, insulation, and joint compound used in seams between pieces of sheetrock. Hire a good construction manager to help you identify if you have this exposure. Next is the professional liability exclusion. Examples of contractors that have this exposure are primarily design-build contractors and contractors building new buildings. Common issues would be water penetration and sound attenuation. Some of you may be familiar with a building in Kaka'ako where wind causes the windows to vibrate and can even make popping sounds. Again, a good construction manager can help you to determine if your contractor should have this coverage. The next exclusion is my least favorite of all. It's the multifamily residential construction exclusion. The wording varies by insurance company, but this is a very bad exclusion. It pretty much excludes all coverage for work done in condos. Some companies don't want to cover the potential loss times however many units there are where the contractor could potentially make the same mistake or use the same faulty materials over and over again. When a contractor wants to do a job at a condo, this exclusion requires the contractor's insurance agent to approach the underwriter to get a carve-out for your project. For this, we want you to ask the contractor for a copy of the actual endorsement adding back the coverage for your project. A simple certificate of insurance does not guarantee that the contractor's insurance agent went back to the carrier and got approval for them to do this job. Okay, on to additional insured status. There are two additional insured forms that you'd primarily be concerned with, the CG 2010, which is for ongoing operations, and the CG 2037, which is for completed work. With both forms, you'd want primary and non-contributory status. In addition, you'd also want a waiver of subrogation. So what does this mean? It means the contractor's insurance pays first. Your insurance does not need to contribute. Also, a waiver of subrogation means they won't come back and sue you after they have already paid the claim. Older forms of the CG 2010 and CG 2037 are from September 2004. New versions are from April 2013 and are an attempt by the insurance industry to limit their exposure and encourage good contract language. The 2013 versions read, if coverage to the additional insured is required by a contract or agreement, the most the insurer will pay on behalf of the additional insured is the amount required by the contract. This can really limit the coverage. For example, the contractor has a $1 million general liability policy with a $5 million umbrella. You require a $1 million limit in your contract. The contractor causes a $3 million loss. The new forms will limit your coverage to just $1 million. The ideal solution would be to ask for the older policy forms. However, that's becoming very difficult because the forms get phased out. On the next slide, I've included sample contract language to overcome the limitations for the 2013 ISO forms. You should ask the contractor to use the language shown here in their contract with your association. It says the contractor and its subcontractors of any tier shall obtain and maintain in full force and effect the following insurances with limits which will be the greater of A, those specified in this agreement, B, the contractor's actual insurance policy limits, or C, those limits required by law. So this states that even if your contract says the contractor must maintain a $1 million limit, you could still go after them for their full policy limits in the event they cause a loss. ISO issues changes as a reaction to loopholes discovered in case law that they want to close. So the Insurance Services Office has recognized this loophole in their form, and they're working on revisions to the form, which will hopefully be adopted by the insurance carriers over the next year or so. Next is the change in occurrence definition. This is a Hawaii state-specific form, and I'm going to tell you why in just a second. First of all, occurrence means an accident, including continuous or repeated exposure to substantially the same general harmful conditions. The background behind this is that there was a lawsuit decision on May 19, 2010, involving mold at the Hilton Kalia Tower on Oahu. The mold occurred over time, and there were multiple claims filed. Because it wasn't clear when the loss occurred, claims were filed with multiple insurance carriers. Tradewind Insurance settled with the contractor and tried to recover some of their payment from Admiral Insurance. The State Intermediate Court of Appeals ruled that construction defect claims do not constitute an occurrence under a general liability policy. So after this ruling, the faulty workmanship of the contractor was no longer covered. Without this change in the occurrence definition form, a construction defect won't trigger the policy to respond. The insurance industry responded quickly by making amendments like this to the occurrence definition so that the court's decision wouldn't apply, since most insurance companies originally intended to cover this type of loss. It's been over 10 years, and the companies that want to cover construction defects have since changed their forms. The likely problem for AOAOs is when they use mainland contractors with little experience in Hawaii. I'm not saying that mainland contractors are bad at what they do, but they might have policy language that excludes construction defects if they don't have this change in occurrence definition on their policy. Now I'm going to go over the policy limits on your normal CGL policy. These policy limits have been the standard since 1988 and probably need to be updated, but until they do get updated, we have umbrella policies that will provide excess coverage. The general aggregate. This is the most that will be paid in a policy year for bodily injury or property damage on your premises. The general aggregate can be on a per project, per policy, or a per location basis. Ideally, you want per project from your contractors. The products and completed operations aggregate. This is the most that will be paid in a policy year for damage to property of others arising out of the insured's product or work. Personal and advertising injury is libel, slander, invasion of privacy, and copyright infringement. The each occurrence limit applies to all bodily injury and property damage claims. We already went over the definition of occurrence. Damage to rented premises is if your association rents a room for the annual meeting and you cause damage to the room, it'll be covered. The medical expense limit is goodwill coverage for bodily injury accidents, regardless of fault. The next slide is just a recap of the important things we've already gone over. Now let's go through a simplified example. It's maybe hard to see on the slide, but it's supposed to be a picture of our office building in downtown. It's a commercial condo. There are tree trimmers outside the building, and they have the street coned off where they're working. There's a guy in a cherry picker up there cutting down the palm fronds, and a guy down below on the sidewalk stopping pedestrians while the other guy is cutting and telling him to stop cutting when pedestrians need to pass through. If someone gets injured by a falling palm frond, they will go after the tree trimmers and the association whose property they were injured on. If the contractor has the CG 2010, you, the association, are protected if they injure someone with a falling palm frond during their ongoing operations. If they have the CG 2037, you are protected if a week later a palm frond falls on a pedestrian because the tree trimmer should have cut it down. Primary and non-contributory coverage using this example, you would want the contractor's insurance to pay first and not ask for contribution from the association's policy. The waiver of subrogation, you don't want the contractor to claim that you contributed to the claims, so you should be paying too. Perhaps they might say that the loss occurred because you told them to park in a certain spot and they couldn't see the pedestrians coming around the corner. Therefore, you were partially responsible for the loss. You want the coverage to be on a per project general aggregate basis. This tree trimmer may have large claims at other projects that may leave you without any aggregate limit available. So now we're going to go through the other insurance policies your contractors should have. Business auto coverage, $1 million bodily injury per person, $1 million bodily injury per accident, and $1 million property damage per accident limits are best. A $1 million combined single limit is okay because most of your umbrella policies will provide excess coverage over either one of these limit structures. Now, the workers' compensation policy has two parts. The first part is the statutory coverage that pays medical expenses and lost wages. This coverage has no limit because the state wants employees to be protected on the job. The employer's liability section covers pain and suffering and loss of consortium or the inability to have normal relationships with family. The $500,000, $500,000, $500,000 limits shown here are what you want to see that the contractor has because most umbrella carriers will provide excess coverage above these limits. It is also extremely important for you to get additional insured status with a waiver of subrogation on the workers' compensation policy. As an example for this one, I'm going to use basically the same example, but it was something I heard at the CAI law seminar about a year ago where someone talked about the same subject. He's a condo insurance agent like me that lives in Florida. One of his clients had landscapers on their property, and one of the guys was trimming a hedge with one of those long hedge trimmers. While he was going along trimming the hedge, he stepped into a hole and fell down, cutting off 2 of his fingers. The landscape contractor's work comp carrier took care of the guy's medical bills and lost wages and probably paid him out a bunch of money for the fingers he lost. The carrier then realized that they didn't give the association a waiver of subrogation. So they went after the association and their general liability insurance to recover the amount they paid for this guy's injuries. This was a really unfortunate thing for the association because if they had properly transferred the risk to the landscaper, they wouldn't have this huge general liability claim looming over them and increasing their insurance rates. For the umbrella policy, it should be following form excess coverage above the general liability, business auto, and employer's liability policies. Consider the job they're doing and the maximum potential for damage that they can cause to your buildings and other people when you determine an umbrella limit that you're going to require your contractor to have. Some common board of directors mistakes. The first one is not verifying who's insuring the materials in transit, off the job site, and while on the job site. The responsibility for materials at different stages should be outlined in the contract. And next is not verifying if the contractor has correct lines and limits, and also not verifying if the contractor has proper endorsements and coverage enhancements. Please have your attorney and your insurance agent review your contracts before you sign them. Some additional non-insurance mistakes are not hiring a construction manager and letting him or her lead the process. If you have a big job, hire a professional to manage it for you. Don't think that you can manage it yourself. Also, having too many chiefs. AOAOs are notorious for governance by the many and having too many experts on the board. You need to resist this know-it-all approach. Next is licensing and bonding. If a contractor is licensed, this means the DCCA has verified that the contractor has training, insurance, including general liability and work comp, and they can obtain building permits. The DCCA regulated industries complaints office requires any project over $1,500 in labor and materials to be done with licensed contractors. Also, plumbing and electrical work must always be done by a licensed contractor. Bonding. A bond is a guarantee by a third party that ensures the contractor's obligation will be fulfilled. There are three parties to a bond: the obligee, which is the association, the principal, which is the contractor, and the surety, which is the company that assures the contractor's performance. There are two types of bonds: a performance bond and a payment bond. A performance bond ensures that the contractor will complete the job. It will pay up to the penal sum or contract amount. Usually you won't be out the entire amount because progressive payments throughout the course of construction can reduce this risk. A payment bond is a guarantee that the contractor will pay its subcontractors and suppliers. The cost for these bonds is typically between 1% to 3% of the contract cost. When is bonding needed? You should check your association's governing documents to see if there are bonding requirements. If there is a loan involved with the construction project, the bank might require a bond. The latter two items here are subjective, so talk to your insurance agent, attorney, and construction manager when determining if you need a bond. So the takeaways I hope you get from my presentation are that contracts are not one size fits all. Different exposures necessitate careful review by your consultants, your attorney, your insurance agent, and your construction manager. Don't just assume that the contractor does this work all the time, so it should be fine to sign their contract without reading it. Thank you all for attending our virtual presentation, and I look forward to reading your contracts. I'll hand things over to Steve Glanstein. Thank you.